Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 2nd of January. Starting off with the FTSE 100, which is continuing its bounce off the floor of that rising trend channel. It's been in that channel since, almost continuously since September last year, or September 2023 rather now. The floor of the channel there at 80.80. Above that, we were looking for the 50 and 200-day moving averages around 8200. Best case at the moment is that we hit that December resistance line. That's currently at 8260. And obviously, if we break that, then we could be back on track for a move to the top of the channel, but to at least 8400 initially. RSI still below neutral 50, so still cannot rule out a failure at the 200-day line and then back to test the channel again, but at the moment looking rather better than perhaps was expected. Moving on to the DAX, and here we managed to close the first gap, but not able to get up to the second gap there, the 20,200 level. At least while we're below the second gap there at 20,000, there's a risk of a test of the 50-day moving average at 19,600. But the main negative here, actually, apart from the failure at the gap, is the way that we've had a failure at RSI 50, which does suggest that we have to test that 19,500 area again, the 50-day line, and October resistance. But at the moment, not looking worse than that. And also we have the floor of the channel there at 19,500 anyway. Onto the Dow, and here a reminder where it stands. Here the 50-day moving average failure. You could argue that maybe there is a channel here, and that we were actually at support, but the main feature on the chart in the near term, it was the floor of that gap there, 42,200. Below that, then there's November support at 41,700. But at the moment, with the RSI failure and the 50-day line coming down, it looks as though we might have to test that November support, even if we then rally after that. Moving along to the situation at Bitcoin, and here it's obviously we're sort of disappointed while we're below the 100,000 level. Here you can see though that we've got this market trying to get back above. In fact, it's already back above the 50-day line. End of day close above that is the first signal that we recovered after multi-testing the 92,000 area, the late November support. And the second big target would obviously be, or second big trigger rather, to the upside would be an end-of-day close above 100,000, but really, end-of-day close above the 50-day line, 96,500, and above RSI 50 as we are at the moment, and we should be back on our way for a move to the upside and retesting 108,000 potentially. Hopefully that will happen sometime during this month. On to gold, and here it has been disappointing, but still holding on to the floor of that channel there. You can argue exactly where it is, or argue about exactly where it is, but let's say that the adjustment that I made there is correct, then hopefully the next resistance here would be the 50-day line there, 2680, while we're above recent support at 2605. The only missing ingredient at the moment is the RSI still below neutral 50, so if you are looking to get on the bandwagon of gold at the moment, maybe you wait for an end-of-day close for the RSI above neutral 50 before assuming that it's safe to call this market back up to 2750. Moving on to the situation with the stocks, and starting off with Avacta, which has made good on the idea that this is a RSI 50 rebound. The last big rally we had in October started with a bounce off RSI 50 and the 50-day moving average, so that was around 44 pence, and the shares basically doubled after that. In this case, we've got a mirror of that particular setup with a bounce off the, or just below the 50-day line, and a bounce off RSI 50. So let's see if we can at least get up to the 58 pence level, which is that July resistance line. So looking a bit better there for a change. Don't want to see an end-of-day close now back below the 50-day line at 49 pence. On to Contango, which after years of waiting, or it feels like years of waiting, has finally got some royalties in. Rising trend channel base, so the market has been anticipating this good news. We had an unfilled gap for the upside back in June, and we bounced above the 200-day line there at 1.2 pence on the floor of the channel, while we're above 1.2, looking for around 2.1 pence, hopefully by the end of this month. And a very strong candle today as well, opening at the low and closing, well, it's currently at the high of the day at 1.5 pence. I suppose the only spanner in the works might be that we haven't had a fundraise here for quite a long time. Maybe the company doesn't need that, but the last one was in April, and obviously that wasn't great for the share price. Moving on to Emmerson, where there seems to be litigation finance in the mix, and even though the share price chart looks like a heart trace monitor, we do have some method in the madness in the sense that it's a double gap down that we had in October and a gap higher today. That means that we're looking at a bear trap island reversal because we went to new lows and then gapped up from there. Top of the channel there at 1.4 pence. That's what we're looking for maybe by the end of next month, while we're above the 50-day line at 0.6 pence. Bit of RSI support there as well, an uptrend line in the RSI window helping the cause at the moment. Moving along to a stock which I covered in the review of 2024. It was a great chart, and here you can see why with Fusion. It's actually up against today. Got a rounded saucer turnaround here for the shares. The big break here was, I suppose, the unfilled gap to the upside in September, and the second one was the break of that resistance line there in February, but really that bear trap gap reversal was the key to the turnaround, and that would have given people who noticed it an entry point near 3.3 pence, which obviously would be very nice compared to where we are now. Current situation is that we've hit our second target there at 7 pence. Above that, we're looking for 9 and a quarter pence basically by the end of this month, hopefully rather sooner than that, the way things are going. After that, one can look back and see that the next resistance is basically the 10 pence area. That's the major resistance for the shares. That's been in place since June 2023. But at least while we're above 7 pence, looking for 9 and then 10 pence on FAB. On to Enwell, which I suppose is very much a Trump trade in the sense that its fate relies on the situation in Ukraine. We've been in a sort of a rising trend channel there since the beginning of last year. Top of the channel there, we collapsed from that point and actually overshot the uptrend line, but found that line again from February. And at the moment, with the unfilled gap to the upside that we've had, or the move to the upside that we had back in November, we've held that. So we're looking really for a return to 35 pence, maybe by the end of next month, while we're above the floor of the channel there at around the 20 pence level. RSI is also pushed through neutral 50, which is helpful to the cause. On to EcoB Buildings, where we have a situation where the shares gapped up basically back in November and then gapped down, but we could have a gap close buy signal, end of day close above the 8.5 pence level. Could be the trigger for a move to at least retest the main summer resistance, main 2024 resistance at 14 pence. But given the history of the stock and the rather erratic behavior, you'd want to see an end of day close above 8.5 pence just to make sure the shares are technically on their way. Moving on to Goldstone, and here we've another stock with a bear trap island reversal, one of the strongest setups around. Gap down in November and gapped up last month. We've held well above the top of the gap there at a penny, and while that's the case, and at least while we're above the 50-day line, looking for the shares to hit the top of that rising trend channel at 2.3 pence, maybe by the end of next month. Obviously, there are a few fundamental issues there, such as convertible loans, but let's see if the chart is predicting things correctly. Moving on to Inspired Energy, and here, after falling out of a rising trend channel that we over the summer, we're back with a rising trend channel base, and actually looks rather good in the sense that we gapped down back in September and gapped up last month, which means we've got another bear trap island reversal. So we're pretty confident of a move up to 57 pence, the top of that rising trend channel base. Hopefully that'll happen by the end of next month. Also, we've got that step fashion, so vertical move sideways and then vertical move again, which is something you only see in the strongest of situations. You can see also the red candles, they're also very, very shallow, so that makes it look as though the sellers have run out of strength there. Moving on to the Mission Group, and here I think there was disposal news, which has led to a gap to the upside. We already had the shares in a rising trend channel. Initial target here, 32 pence. Hopefully over the next week or two, best case scenario target, maybe by the end of next month, is up to 43 pence, which is the upper parallel of that rising trend channel base from October 2023. Onto a stock which I didn't expect to see in the bulletin board heroes, but here it is. We've got Revolution Beauty, and here another situation where we gapped down to new lows and then gapped up. So we've got a bear trap hard and reversal, looking for a best case scenario target there up to 25 pence by the end of the next month. And the longer we stay above recent resistance at 16 pence, the better and more certain we can be that we're heading higher. The other point to note is we've got a double bounce off RSI 50, which is also, as in the case of Avacta, a leading indicator on the upside. Been following the recovery in Renalytix, probably the only one who's actually doing it at the moment. And here, first target was 10 pence at the top of that broadening triangle base from September. The second one is up to 12.5 pence. And hopefully by the end of next month, we could be as high as 15 pence. I think that the company's already raised its money, so hopefully this is a decent rebound, at least for, filling that gap up to 14 or 15 pence. The other point to note is that we haven't had a red candle on the daily chart since the end of November. In fact, the 28th of November. So that is a very strong chart indeed, especially with the rising 50-day moving average helping the cause as well. We've also got that step fashion, so vertical move, sideways, vertical move, etc., which is again a very strong piece of price action. On to Serinus, which seems to have broken out of this falling wedge it's been in since October. The break there around 2.1 pence, and above that looking for a best case scenario target as high as 3.9 pence by the end of next month. Once again looking and enjoying those very strong candles that we've had since Christmas Eve on that situation. On to a stock which doesn't get much airplay anywhere apart from here, which is Surgical Innovations. And here you can see that we've got this rising trend channel base, top of the channel there, heading for 0.88 pence. We're looking for that by the end of next month, while we remain above the 50 and 200-day moving averages, the 50-day line there at 0.55. So we'd like to stay above that. On to the last two. The first one is Touchstone Exploration, and here W-shaped reversal, and after the gap down that we had back in November, W-shaped reversal means that while we're above the middle of the W there at 25 pence, looking for the shares to fill the gap up to 35 pence, hopefully by the end of this month. Finishing off with one of the stocks of the last few weeks, which is Zenith Energy. And speaking of stocks which haven't had many red candles, you can see that the last time this stock had a red candle was on the 1st of November. So basically 2 months and a bit of totally blue candles or neutral candles, very, very strong price action. We've managed to hit our second target there just below 4 pence. Third target is there at 6 pence. And maybe by the end of next month, we'll go up to 9.5 pence, which is the best case scenario for the shares. But the longer they stay above neckline resistance at 4 pence, multi-year neckline resistance, the greater the chance of a move up to 8 or 9 pence plus. That's it from me today. More updates tomorrow.